Welcome back to the Midterm Rental Mastery Show. My name is Tanisha Spencer. I still have to get used to saying that after getting married, so my name changed. And I have the pleasure today of bringing on CJ, who is the Director of Claims from Steadily Insurance. And we're going to have a pretty interesting conversation today about insurance, not insurance bookings, but insuring your property the right way for your midterm rental, short-term rental. We'll throw in some stuff that may be helpful if you're doing long-term rentals. So CJ, I am going to pass it over to you to give a little bit of an intro about who you are, what you do, and about Steadily.
Awesome. Well, first off, thanks for having me. It's exciting to be here, and not often are people excited about talking about insurance and claims, but I am. So I'm excited to be here. So Steadily, we consider ourselves a startup and insurtech company, but we're really focused primarily on landlord insurance. We've been around coming up on 4 years. And we really have two branches or arms, I would say. One, we operate as a retail agency, and then the other, we operate as a managing general agency. And in that arm, we handle the sales, the service, the underwriting of policies, while another carrier retains most, if not all, of the risk. So on that side is where I come in with being the director of claims. Where we're building out our claims team here at Steadily to make sure we're there for our customers if something bad does happen to their property.
Awesome. So I'm also excited talking about insurance, and I might be one of those little weirdos too, because I have a 20-year background in the insurance industry. I used to be a claims adjuster. I was also a claims manager. I dealt with a lot of catastrophe claims. And so I also love the insurance conversations. But again, you're right. Not that many people are excited. So really glad to have you here today. I think this is going to be a good conversation just from my opportunity to speak with you earlier. And I know you have a presentation that you want to share. So we'll run through the presentation. And for everybody that's watching, we've got some questions that we posted in my MTR Mastery Facebook group that we kind of asked ahead of time. So CJ could be prepared with some answers and things. So, he's not totally caught off guard, and we get some of the questions we really wanted to know taken care of. So he's going to go through that. And then at the end, we'll open it up for Q&A. So if you guys have questions, you can pop them in the chat. There's going to be quite a few that we answer. And again, I think this is going to be really valuable for everybody that's getting into the midterm rental space or already here, just to learn about different things related to insuring your property the right way. So we can get into your presentation.
All right. I think we're seeing everything good on the screen,
All
on
set.
my end at least. All right.
Mm-hmm.
Well, good deal. I know we've got a lot of information to cover. So in some of these, I'll be brief and make sure that we have time at the end for questions. But you're going to hear me say the phrase, "it depends," probably a handful of times today. And that's because in the claim space, in my world, "it depends" comes up a lot. And that's because it depends on a lot, both the policy, the facts of what happens. And so I'll try as we go through today to discuss in broad terms different situations, but it may not address every specific nuanced conversation that we could have today. I find a lot of times when I'm dealing in the claim space that consumers don't know a lot about insurance to begin with. And so I just wanted to start off with hitting some high level basics around what is insurance, what's going on in the market right now, and then transition into what is Steadily and how do we fill a need or a void that exists. So at a high level, the role of insurance is to help manage risk, and you pull together the resources or premium of all of your customer base, and then you offer compensation for covered losses. And so it's really a shared risk approach. But what we do on our end is we use data, inspections, models to set pricing. Most policies carry deductibles, but but you'll find that companies have different risk profiles as well across the board. You might have some companies that only do commercial property. You might have others that only do personal. So every company is a little bit different. But a lot of companies in the property space use something called reinsurance, which can be scarce. It can impact availability. But what reinsurance is it's insurance that companies purchase to help guard against large scale losses, major catastrophes, major claims, etc. And the piece of it being scarce or impacting availability is reinsurance companies. They want to try to make money as well, and so they want to be careful about where are they putting their money, where are they being risky, and that's kind of what we see in this industry right now. It's a hard market, and it's the hardest market in 50 years in the property space. And a stat here I think that's really interesting for everybody is in the 80s, we were seeing billion-dollar weather disasters every 80 plus days. The last 5 or so years, that's happening about every 18 days. And so between the frequency of these events happening, the rising inflation costs that impact the cost of repairs, it's getting more expensive to repair properties. And so you see all kinds of different things happening. You see carriers pulling out of various states. They haven't been able to make a profit or get rate past state regulators, and so they ask themselves, is it worth it? And they may pull out of that state, which for the consumer obviously lowers different options that they may have. And so it's really had a massive impact on the insurance space as a whole. And so if you're out there right now and you have a property, or maybe you're even looking into your first property, you want to be aware of where some of these markets are the most challenging. And a lot of the coastal areas right now with high wind, storm risks, hurricanes that you can see highlighted in the map below pose risks. And you may experience challenges finding options for you, but also wildfire risks. So parts of California, the Smoky Mountains, South Dakota, etc. There's a lot of challenges in those areas right now in terms of options for insurance. And so we currently don't write business in Florida, for example, or New York or Louisiana, but there are still options out there. But be prepared for higher rates if you're somebody that's looking to enter into that market. So I just wanted to kind of start off with that high level overview before maybe zooming in a little bit more to what landlord insurance is and how Steadily fills this need. So landlord insurance overall, some of you may have heard it called dwelling policies or dwelling insurance, is really designed for people who rent their homes to others. Coverage against legal liabilities, things like fire and water damage, certain natural disasters are covered, and also protection against tenant injury as well is all part of the landlord insurance policies that we can offer to our customers. Some of the coverages that you see are similar to things you'd see in a standard homeowner's policy, but under the dwelling policy or under the landlord insurance, there are some other coverages that are in addition to and may be tied directly towards somebody who has an investment to protect. So vandalism and theft is one we see come up a lot. But it's really specifically for folks who are renting out their homes. Some things that they don't cover. So these are items that I would say often come with common misconceptions or maybe even assumptions that this is something that that the landlord insurance covers. But I want to highlight some of these. So damage to your tenant's belongings, that's not something that landlord insurance would typically cover. That's where renters insurance policies come in. Normal wear and tear. Some people have referred to this as hard living, for example. So, your tenant, maybe it's a midterm and they're in a 6-month lease, they check out and, they have handprints all over the walls and dings where they've let the door slam back past where it should be going. Those are things that are hard living and not something that is necessarily covered. The tenant damaging your belongings. Here we go. Our first, it depends. Okay. I just mentioned a couple examples where you could argue that tenants damaged your property, where it's hard living or normal wear and tear. If there is an instance of vandalism, or we'll call it malicious mischief, those are items that could potentially be covered under the policy. Again, it's nuanced and comes down to that specific events. Also, I mentioned earlier, a lot of natural disasters are covered. Some of them that are not, floods and earthquakes are two major ones. And oftentimes a policy is needed elsewhere in order to get coverage for those events. So a flood policy, an earthquake specific policy. There are also some states that require earthquakes to be bolted on as coverage. And in those states, that's something that would be covered, but it's not via the base policy. It would be via an endorsement. So just a couple quick hit items there. So what kind of insurance for a midterm rental? I know a lot of this audience is in the midterm rental space, maybe some out there in short-term rentals. So carriers typically look at anything under 6 months as short-term, even though your 1 to 6 month in this space is called midterm a lot. Some even extended to 12 months, but honestly, it's really going to depend on the type of insurance policy and the type of carrier that you're working with. In our situation at Steadily, short-term and midterm kind of fall into the same bucket. That's 6 month and under window. Major coverages, just to hit on these real quick. So the dwelling itself, that's obviously your biggest ticket item. But other structures, so these are items or structures not attached to the actual building itself. So maybe you have a storage shed in the backyard or something of that nature that can be covered under the other structures. Personal property. So I know a lot of folks in the midterm space are furnishing their unit. This is where the personal property coverage comes into play. And then fair rental value. So if anything occurs that maybe a covered loss that makes the property uninhabitable, this is where the fair rental value coverage kicks in. And then finally, liability coverage. So there's a whole host of things that could happen where a tenant may be liable for damages or injuries that are occurring as it relates to the property. And this is where the liability protection can come into play. I added a quick pro tip here because I see it a lot. In this space, there are some instances where within the policy, vacancy can lead to coverage not existing. So a couple main areas that pop into my head off the bat are vandalism, burglary, theft. If the property is vacant beyond 60 days, oftentimes those can be exclusions. And so what I would encourage for everybody out there is to talk with your agent about the situation with your property. Make sure you have the right type of coverage. There are policies out there for vacant properties if it's going to be a long-term vacancy. And there's also properties out there that, even steadily, we have a couple of these that are intended for folks that are fixing and renting or even fixing and flipping a home. And those have different language about vacancy versus your standard base policy. So the key takeaway here is if you're going to have an extended vacancy, make sure you're communicating about that proactively with your agent so they ensure the policy that you currently have is the one that is offering you the right type of protection.
Hey, CJ, I got a really good question on that one. So
jump in.
So sometimes in the midterm rental space, we have vacancies. Like if people are doing it right, they underwrite with the intention that there's going to be some time of vacancy. So how do you prove, let's say a loss occurs, how do you prove that the property hasn't been vacant?
I would say
if you don't have a lease per se.
Yeah, the most popular way is a lease agreement, but in the absence of those, communication or conversations with your tenant are helpful. And maybe the tenant has sent you a message saying, this is the day that I'm going to be moving out. So primarily lease agreement. Secondarily, any type of additional communication can help support that.
Awesome. Thank you. Good. I get that one a lot. It's like my property's been vacant for like 60 days or 45 days and I don't have a lease. And then what happens with my insurance? So cool.
Well, in that situation, let's say today is today's June 27th. Let's say your lease ended May 31st and they moved out then. If the loss happened on the 27th and we get the lease agreement that says it expired May 31st, there's your sufficient proof. Where I see it come up a lot though is some landlords that are not necessarily on top of their lease terms may let the lease expire and then it goes month to month. And so you could have a span of 3, 4, 5, 6 months go by where there's not a lease agreement in place, and then they don't have the lease agreement for that window. So pro tip for everybody out there, make sure you're staying on top of your lease terms so that your lease is not going month to month at the expiration.
Yeah, that's a good idea. All right, cool. Thanks.
Cool. Common claims that we see in this space. I have a lot of people say, wow, those Airbnbs or those midterm rentals, they must have all kinds of damage claims. And that's actually a misconception, that we see all kinds of tenant damage. We certainly see it. It doesn't not exist, but generally speaking, we see a lot of the same type of property claims that your standard long-term rental may see or your homeowners may see, with weather-related claims a lot. We just are coming through hail season, so a lot of weather-related claims. Water-related claims come up a lot, pipes breaking inside the home, leaks, etc. And then the component that really does come towards this STR space a little bit more, vandalism and malicious mischief. So again, we do see those, but they're still not as prevalent as your water or weather claims. Couple other quick things, underwriting watchouts to avoid. Like if you're looking for a property, these are some key items that may make it more difficult to find coverage out there. And so these are some things to just be thoughtful of. So the electrical system, avoid knob and tube wiring or the presence of a fuse box. Make sure that what you're purchasing is up to code, or that you have a clear plan to get it up to code. That's an important thing. Aluminum, tin, flat roofs without drainage, solar panels covering more than 50% of the roof. These things are either prone to claims, A, or B, really expensive to repair. And so you'll see the options shrink as you add on some of these things. Roof age, 20 years and older. In some situations, if it's older, it may be required to be replaced in order to get coverage, or you may end up finding policies that exclude the roof completely. And then we all hear about swimming pools and trampolines, but you want to have those enclosed with a 4-foot high fence with locking capability. This is obviously where the liability risk comes into play, right? If you have a short-term rental, you don't necessarily have control over the age of the folks coming in and out of the home. You don't necessarily have control over that child that is sneaking off through the back door to run towards the swimming pool. So they increase the liability risk, and in turn can create underwriting concern when it comes to insurance. I know, Tanisha, you mentioned earlier that some questions had come in from the community, so I wanted to hit on some of them, and then I think we'll have more on the back end. But does the policy cover damage to the property and its furnishings caused by tenants? I think I already hit on this one throughout the course of the presentation, but the furnishings themselves, it depends on who owns the furnishings. So are they owned by the owner of the property or the tenant? If they're owned by the tenant, that's going to be a renter's insurance coverage. If they are owned by you, then it depends on how the damage was caused. Was it a result of hard living or wear and tear, or was it a result of a covered loss, wear and tear, or a covered loss such as vandalism, malicious mischief, or maybe there was a water damage claim that caused those furnishings to be damaged. Are there any specific scenarios where liability coverage would not apply? This is a really good one. Um, there are a couple scenarios that come to mind. This first one, hopefully nobody listening to this is engaged in this, but if injuries or damage is caused intentionally by or at the direction of somebody who is insured under the policy, i.e., you, then that would be something that is excluded from coverage. There's also exclusions for um, uh, if there's professional services being rendered on the property, then those rendering the professional services that suffer an injury, it can be excluded. Think like I'm having somebody on to, repair the roof or something of that nature. Generally speaking, those contractors will have their own insurance that are covering that. And then if you hire anybody directly, maybe it's not a professional service, but you've hired somebody or they're an employee of you. Maybe you own a company and the employee is on the property and gets injured. Those are some examples of items that where liability coverage may not apply. Are there any requirements for tenant screening to ensure the policy remains valid? No, we do not have any. So that one's pretty straightforward. How are the contents covered under the policy? Most of the contents, so furniture and appliances, those are going to be covered under the personal property side. But items like, let's say, the furnace or the air conditioning unit, hot water heater, items that are permanently affixed to the dwelling, those are things that would be considered under the dwelling portion. Washer and dryer, personal property, but the other items are ones that can go under dwelling. What is the process for filing a claim? What documentation is required, and how long does it take to start payments? This is a really good one. And the answer to this question is it really varies. And it varies based off of what the specific claims team's practice may be. So I'll give you what we do internally at Steadily if somebody files a claim. We have multiple avenues for somebody to file a claim. They can do it by giving us a call. They can do it online. They can do it via email. All of those options end up kicking off the claims process. And then you said what documentation is required? It depends. And how long does it take to start payments? It really is dependent upon the loss type. So I have had some claims that are fairly simplistic in nature, require no documentation other than we complete the inspection, verify there's damage, and then payment's been issued in a few days. And so we've gotten that process done really quickly. I've had other claims where if it's a extensive fire loss and there's fire mitigation involved, there's investigation from the local fire department and a independent fire adjuster into the cause and origin of the claim, those can draw out months. But during that time, if there's lost rents, we can be progressively issuing payments while the claim is being evaluated. So the complexity of the claim, I would say, does a great deal in terms of dictating the speed of the claim on our end. But one quick thing to note, or that can help speed up the claims process on your end, is making sure the communication with your property manager or your tenant is really solid. The biggest delays in inspection that we see are a result of nobody being available for the inspector to be able to get into the property. And so the communication from you as the landlord with either the property manager or the tenant and making sure that there's a window of availability for inspection, the sooner the better, and we can get that process rolling. I think
Awesome.
that covers it. Tanisha, back to you.
Cool. So that's great. So those are the questions that came from our community. And I think especially like when do I get paid out? How does that process work? A lot of people wonder that because the majority of us as homeowners or landlords will not have a claim, which, by the way, is the same as a lot of us who do like the temporary housing for insurance. It's the same thing. Most of those people, they never have a claim. They don't know the process. And so this is super helpful, given that information. So I want to jump into the other questions that we had. And If anyone has questions, you can pop them in the chat if we haven't answered them already. So the first thing I told CJ, like, I want to give a little bit of a breakdown between the difference for a broker and them as an insurance carrier. And I know that you talked about it briefly, that you do both. But really, I want to tie that into, like, what's the benefit of coming to a broker for insurance versus, hey, I'm not going to name a company because I've worked for a company, so I'm just not going to name them. And I know you have too. So, like, if
Yeah.
I went to ABC Insurance, what's the difference between like a direct insurance carrier and coming to Steadily?
So I'd say broadly the definitions are just a little bit different. So an insurance company really is what they do is they assess an individual's risk. And this is regardless of whether they're trying to insure a car or whether they're trying to insure a property. They assess the risk and then they charge a premium as it relates to the risk. And then in exchange for that premium, they are promising to pay whenever a loss that's covered under that policy contract happens. And so that insurance company is taking on the risk, and then they are responsible for paying claims that occur. And so the insurance company is the actual one going through that process. An insurance broker or a agent, they are acting as kind of the intermediary between the insurance company and the consumer. And so that insurance agent might be appointed by, let's say, 5, 10, 20 different insurance carriers, and they will then shop around to the various carriers that they're appointed by in order to find you a product that fits your need. So there's pros and cons of each. I would say if you're going through a broker, they're going to be able to maybe customize and tailor to fit your needs better. Then there's other people out there, there's other consumers out there that prefer the direct to consumer approach that some large companies do, and we have an option for those customers as well. But I would say that's the main difference between the two is the company is the one taking on the risk and paying claims. The agent or the broker is the intermediary that's shopping and finding the best product that fits your needs.
Yeah, that's awesome. I think I was telling you earlier. So I have Steadily on my midterm rental that I own in, like for that one specifically, North Carolina. And the person that I was working with, they did a great job. I had a carrier that was supposed to quote us. And then actually, I was trying to think what happened in that scenario. It was one where it was supposed to be like a big storm, so they decided to stop writing policies at the moment. You know what happens when you have big
A
storms. They're like, oh,
moratorium.
let me shut this down so people can't get insurance at the last minute. Well, I don't even think it was a real thing going on, but because I didn't see any weather and I know how to search for that because I used to do cat claims. So the person I was working with was like, well, let me check with another carrier. And because I went through a broker, through Steadily in this case, it was super simple. So they actually found me another carrier that wrote the policy for me and gave me a better rate. So I'm super happy with my coverage going through Steadily as a broker.
Yeah, and that's honestly one of the main reasons that we have the managing general agency arm and the retail agency arm is that we want to be able to offer a policy to 95% plus of landlords that are coming to us seeking one. And the product that we offer on the managing general agency side may not always be the best fit. And so we want to be able to find businesses out there that it is the right fit for, or to find carriers out there that it is the right fit for, and then still be able to serve, the consumer as well.
Yeah, that's awesome. Okay, so we're going to keep the answer to this next question super short. It's
Okay.
either you do it or you don't. This happens all the time. Arbitrage, which for anybody who doesn't know what arbitrage means, it means I am going to go find a landlord who's going to allow me to rent their property from them as a long-term tenant. And then I am going to have the right to sublease. And then the question is, hey, Steadily, do you guys insure for arbitrage?
No.
Wonderful. answered and done. So anybody who is reaching out to Steadily for arbitrage, they don't do it. So don't reach out to them. Okay, so the next question is renters insurance for Steadily for the tenants. Do you guys offer it or do you not?
No, no, we do not specifically offer renters insurance. Obviously, if you're in the midterm or long-term space, you should really encourage your tenants. Some even require them to have renters insurance to protect their belongings. But I would just one thing to add that maybe people don't know a lot on the short-term side. A lot of the folks that are staying in properties on the short-term side may being the key word here, have homeowners insurance coverage that carries off premises personal property coverage. So there could be an avenue for those tenants to have their personal property covered. Maybe it's stolen or vandalized while they're at the Airbnb through their homeowners that carries off premises property coverage. That's something that a lot of people may not know.
Awesome. Yeah, I found that out in the scope of working some of my claims. And I found out that their coverage with their primary insurance transferred for their contents when they were moving into my place. So I don't often ask people to get renters insurance, but to each their own how they run their business. Okay,
Sherelle,
cool.
I saw a question that Sherelle asked in the chat. The answer
Mhm.
is no. It's not required that they have their own.
Oh, this one, I don't know if I sneezed. She must be part of sub two because Pace always says, "Did you sneeze when somebody asked that question and you got the answer?" So cool. I just pop it on the screen so everybody can see what she asked. So Sherelle just asked, "Does the policy require tenants to have their renters insurance?"
So is the sneezed comment basically the way of saying, I may have missed this, but in
Yes,
reality,
exactly.
she's saying, CJ, you didn't say it, and I want to know the answer.
I love it. I love it. Okay, cool. So next
That was a
question
nice way. Thank
is,
you.
that is a very nice way. I'm very good at like stealthily saying things without it sounding like I said something else. So I might have to take that one and use it in the future. All right. So the next
I used
question.
to I
Oh,
used
God.
to I used to have a boss of mine who was a fantastic leader, who would say, "I'm 100% sure that you've thought of this before, but."
Which means I know you didn't think about this, and I'm going to say it so you feel good about yourself. But that's
Yeah,
great leadership, right? It's not making people feel bad, or I think that's great. That's
yeah. He would then proceed to outline how you should have been thinking about it all along. Did it in a very graceful way, but you left the conversation way better than you were before. It was awesome.
Yeah. That's the sign of a wonderful leader. I wish we had more of them like that. Okay. This is the big one for a lot of people. If I have something that happens in my property where I cannot rent it and it's a covered claim or covered loss, do the policies allow me to collect money while the property's vacant?
Yes, yes. Keyword being their covered loss, and it's up to whatever the policy limits are. So most of the time, the fair rental value policy limits are about 10% of the dwelling limits. So maybe you have a $400,000 dwelling limit, and then you're going to have up to $40,000 of fair rental value. Now, does that mean you just get a check for $40,000? No, it is covering loss rents that you incur as a result of a covered loss. So, I've seen one where a tree falls on the property and causes structural damage and makes the property uninhabitable, and there's going to be 2 months to repair it. It would cover the 2 months that you lost rent for. So, yes.
Okay, cool. So anybody that sneezed, then I'm going to repeat it for you, which if you have a covered loss with your insurance policy and you can't rent out your place, it's uninhabitable, nobody can live there, then you can have loss of income included in your rent in your policy. And so this is my favorite part, right? So this is the stuff people don't pay attention to when they're setting up the policy because they're always thinking about the price up front. And my philosophy, because I've been in the insurance industry for a long time, was people only care about insurance at 2 points. in their life, like during the policy, when they have to sign up for it and when they pay for it. And I ask people all the time, when's the last time you looked at your insurance policy? And I get this like crickets blank look all over their face because they didn't actually look at it. And then the second time when you care is when something happens in your property and you want to file a claim. So if you have a policy now, go read it. And if you don't, contact Steadily for a quote because they can walk you through the different types of things that you need to consider.
Yeah, I think it's a great point that you bring up around the points that somebody really cares about it. But I would also argue and encourage that you should care about this at the same level as when you were shopping for your next deal or finding your next property. Um, you need to make sure you're looking into protecting your investment because these events, they're unexpected. They can't be, they can't be predicted. These things pop up. Um, and you want to make sure that the investment that you've worked hard to acquire, to build, whatever, is not going to be negatively impacted because a windstorm came through your town and took it all out, and you didn't take the time on the front end, and now you're holding a mortgage with no insurance that is covering the loss, right? So that's something. Great point on bringing that up. It's something to be thoughtful about.
Yeah, that always sticks in the front of my mind because, again, I did claims for a long time. And so the argument I used to always get was either you guys should just give me what I want because I never use my insurance and I've been paying you for it for years. So that was
Mhm.
always the argument of why they should be able to get something that they either didn't pay for, or you should just give them more money just because they paid for insurance all this time and never used it. I'm like, you know, I would love to give you more money, but I also want to keep my job because I want to keep my own house too. So
Yeah,
that,
well, and and here's the other thing too is that, and this kind of goes back to the basics of insurance, is that what it is it's a contractual agreement or exchange from two parties. The consumer is going to pay a premium in exchange for coverage under the contract. So I'm assuming as you enter into agreements to purchase properties, as you are writing up your lease agreements, you are reviewing those contracts. It's important you review the insurance contract as well. So you're educated as far as what is covered and what is not. I'm not claiming it's going to be riveting reading, but it's important reading, so that you have educated yourself on what you're covered for and what you're not, so that you can plan accordingly.
yeah, that's the big one. The I know what's not covered too. Okay, cool.
And
So,
one other quick
oh
thing
yeah,
to add is the thought that everything should be covered, or I can't believe that this is excluded. Um, if everything was covered, or a lot of the exclusions didn't exist, the cost of insurance would go so high that it would make it nearly prohibitive to acquire. So there's reasoning and rationale as to why some of the exclusions exist in the policy, or why certain things are not necessarily covered. But the argument of all of this should be covered would then equate to sky high premiums that probably nobody would be able to afford as they look at all the calculations of what's going to lead to their property being profitable, which I think everybody on this is trying to achieve.
completely agree with you. Yeah, I heard that one a lot too. My premium went up and I never had a claim. Well, thank all the other people who filed claims that tried to get stuff for free that wasn't covered, or, again, that's a diatribe I won't go on right now because I just have some trauma from claims experience.
Yeah, it's estimated that between 5 to 10% of all lost dollars paid in claims are resulting from fraud. And that then impacts everybody. So that's an interesting stat that we could probably do a whole nother show on.
Yeah, I got some stories about fraud claims when I used to handle cat claims, and I definitely have some stories about those. Yeah, we might have to do that. All right, so I'm going to jump to the question about the OTAs. And for anybody that asks what's an OTA, it's an online travel agency. So is there coverage let's say the booking comes through Airbnb or VRBO or one of those other booking platforms. Is
Mhm.
there coverage still with the policy that's written by Steadily? And then is that primary or secondary to like an air cover or whatever coverage may be available?
Yeah. So the first question is, yes, our short-term rental product is really geared towards these exact examples. So the short answer is yes. As far as primacy, a lot of it depends on what the policy actually says from, let's say, an air cover side or some other insurance company offering a product versus what our policy says and what it specifically covers. Like my familiarity with air cover is that it doesn't actually cover natural disasters or those type of events, whereas some people think that it does, and then they don't get the appropriate insurance. So a lot of times those air cover and the property insurance are not uh, they're more complementary than they are duplicative products. They more complement one another. In the event there's a policy that exists that covers the same thing as, let's say, your base policy covers, generally there's an excess clause in the policies that says who should be primary and who should be excess. Um, in the event both policies say the other one should pay, which does happen, then generally they're pro rata or they prorate or share the loss difference if there were two policies active that cover the same thing. So we call those in this space competing excess clauses.
Oh man, this brings me back to my definite days of working claims with all this language. It was literally my job to read and interpret policy for people. So yeah, those languages I know well. Okay, cool. All right, so I think I asked you and you told us a couple. Can you tell us like a story of something related to a claim that you've seen that you think would be good for this like furnished rental space? Either something that was covered or something wasn't covered, in the claims process.
Yeah, so it's kind of interesting. I've been in claims for 10 plus years now. Um, and so all of the crazy stories, you almost become a little desensitized to them, and now they're just stories. But one thing I see come up a lot that, um, it sticks out to me in terms of being a negative experience for the customer on the claim side, but also, in terms of financial impact, is when they don't carry enough coverage, when they have not been thoughtful about the limits that they select. And going back to the, our commentary about educating yourself, really knowing what your policy covers. There's a lot of policies out there, ours included. A lot of them have water damage limitation, which caps damage as it relates to water damage at a certain percentage of the limit. And so, I've seen one where we might have a $200,000 property that has a $20,000 10% water damage limitation. And something happens where, a tenant leaves the tub on, or something occurs where water damages the property for days on end, and now we've got a $100,000 loss and $20,000 in coverage. And if hindsight's obviously 2020, but seeing folks proactively think through what coverage they need in the event some of these things happen, it is really important. And yes, it may cost a little more, but I think you'll find that the cost change from increasing those limitations is a lot smaller than having to deal with that potential, $80,000 difference on the loss. The other thing is that when you're thinking about liability coverage, that is definitely an example of where nobody thinks about it until it's time to use it, where you have a tenant that's been hurt, and they went and found that they have an attorney now that is representing them, and they're seeking damages from you for being liable. Making sure that you're carrying coverage to protect yourself in those instances, and not just yourself but all your other investment properties that you own, or that LLC may own, like that steps in when you need it. And it's really important to be thoughtful about those. So some of my, I don't know if I'd call them crazy stories, but I'll say most unfortunate stories is when I've seen people not select appropriate coverage amounts, and then they have a loss that causes, a lot of heartache in their life. And if that's avoidable on the front end, then it's something to be thinking about.
Yeah, that's such a good point because like when I first started on the auto side for insurance, the thing that people used to complain about was like, I had a damage to my car. I can't drive it, but I don't have rental coverage,
Mhm.
right? So it's like even that simple on cars. And you look at how much it would have cost, and it's like pennies on the dollar. But again, it goes back to what I said. People look at their policies usually two times. The first time when they have to pay the bill, and a lot of people are just trying to see how can I not pay a whole lot of money, or when you have a claim, and then it's like, well, at that point it's too late, or you can fall into that fraud category and try to change your policy and then report a claim. But let me just tell you that a lot of times you will get caught because the damages tell a story.
Yeah. Well, here's the thing. You mentioned like they change the coverages because they want to pay a lower premium. There's nothing wrong with wanting to pay a lower premium, but understand that lowering the premium did not lower your risk. Meaning the chances of a loss occurring remained the same regardless of whether you changed that coverage. And so what I see a lot of people do is they're lowering their premium or they're removing a coverage even. That risk still exists, which means you are now self-insuring for that peril or for that incident occurring. You're now self-insuring, but nothing on the financial side changed to self-insure financially, right? So again,
Yep.
nothing wrong with wanting to say I want to self-insure or take more risk on myself, but make sure you've thought through that from the financial side of the house, so you are self-insuring appropriately and have a emergency fund or a pool of money available should something that's not covered happen.
Yeah, that's a really, really good point. So, with that line of conversation, and this is the last question that I have. So, if anybody has a question, pop it in the chat because otherwise, I'm going to let CJ get back to his day. So, last question: what are some ways that you would suggest people protect their properties, whether it's their furnishings, et cetera? And that may include what you just said about having the appropriate coverage. But what would you say about just ways to protect your property?
Yeah, so I mean, I would say the first couple of things that come up are going to be, your standard maintenance. Make sure that you are caring about that investment enough to conduct the general maintenance. Lack of general maintenance can increase the odds of a risk, or excuse me, a loss occurring. And to be honest with you, lack of general maintenance can also increase the chance of wear and tear losses happening that are excluded, right? So general maintenance, make sure you're adhering to, any local building codes. Those are also important ones as well. Some that people don't think about a lot. A lot of you are probably familiar with the existence of the Ring cameras or the security cameras from the theft, vandalism, that type of standpoint, as deterring that side. But there's also products out there that are, smart smoke detectors, where maybe your tenant is out of town for a few days, or you have an Airbnb that has 2 days in between. You can get alerts on your phone when the smoke detector is going off, and maybe alert the fire department faster. Then nobody knows that it's burning because there's nobody there. Or there's also technology out there that does leak detection that attaches to the actual piping system of your home and can detect even small leaks that could then end up leading to a big water loss later. Again, different technologies out there that you can take advantage of that may be an investment up front, but can pay dividends. And depending on the company, I know Steadily specifically, like we do have certain discounts for things like security cameras, for things like smoke detection, and the like. So That's probably what I'd say. I do want to, I'll hit on two quick questions in the chat. I think it's Vera. Forgive me if I'm mispronouncing that, but Vera, coverage for asbestos testing and removal was not covered when I filed a claim for pipe burst. I obviously there's different policy specifics, but I am familiar with there being some carve outs for pollutants and pollutant testing as not being covered. There are different coverages. One that comes to mind is ordinance and law. Sometimes if there's certain requirements relating to a local ordinance that may not have existed when the home was built, sometimes ordinance law coverage can step in place in instances where things are required by law that may be in addition to what the current property looks like. But I am familiar with some policies having carve outs for pollutant exclusions and losses related to pollutants. Surge puts umbrella on top of my insurances, umbrella policy. That's a good point. Make sure, again, you're reading into policy specifics. Most umbrella policies are liability related and step in instances that you're liable versus stepping in to cover your property damage when it's excluded from your base policy. So that's another thing to be thoughtful of.
Yeah, that's a good point for sure. Well, so I was just thinking what you were talking about with cameras, right? So I had a claim when it was probably maybe 5 years ago, and those big fires came through California, like the Woolsey fire and the Camp Fire. And my team for the company that I worked for literally handled all of the claims there. And there was someone that was trying to prove the time that their loss occurred. And do you know how we did it? With their Ring camera.
Wow.
The Ring camera literally showed the fire approaching their house with a timeline. And because of the blaze, it actually picked up on the camera to show the fire coming toward their house. And that's how they were able to prove the time of their claim. So those cameras are good
That's
for
wild.
so much. Yeah.
One thing I'll just add, you mentioned time of claim, but it caused it to pop into my head. In the event that you do have a claim, it's always important to keep track of any communications, acquired documents, things that you've done. You may call out a mitigation company, or your property manager might right out of the gate. It's really important to keep track of their invoices. It's important to keep track of any photos that you've taken or that your tenant has sent you. The worst thing that can happen in some of these situations, and I've seen it occur, somebody calls in and reports that a loss happened. We get out to inspect it a few days later, and all of a sudden everything's been repaired. And there's no track record of what the damages actually looked like. There's no proof to say, oh yeah, this loss happened this way or actually caused damage. At the end of the day, on the insurance space, we have to be able to determine what was the cause of loss and what was the damage that related to that cause of loss. And it doesn't mean don't take emergency measures. You definitely need to be doing that, but we still have to have some method to land at what's the cause of loss and what's the damages related. And that can be done through visual inspection, but it also can be done by photographs, right? The timeline of the plumber being called, here's their invoices, all of that stuff can really be helpful.
Yeah, and the metadata on those photos too, like people don't think about that, but the metadata behind it still has a timestamp. Again, I dealt with a lot of claims, so
Yes.
I should have been an SIU, like special investigations investigator. But yeah, so that's so important. Well, I don't have any other questions.
Cool.
I don't think I see anybody else in the chat. We're right at our hour. CJ, thank you so much for coming on. This was cool. It's like, I don't really get to talk claims anymore because I don't do that side of the business. So I just do the housing side now. So this like takes me back to my long-term history in the claims world. But I hope it was really helpful for everybody that jumped in, because like we're thinking about the investment, but the investment is just not the property. It's the protection behind it. And the better we understand that, I think the more educated we can be about planning for the future, because that's the whole point. Like we do investments because we're it could be your retirement planning, it could be whatever else. And so the same way we have health insurance, the same way we have car insurance, and homeowners insurance for our own homes, we want to make sure that we also protect ourselves and our properties from stupid people doing stupid things. No offense to anyone, but that life happens. Or, the things that we can't control, like bad weather, major storms. So thank you, CJ. I really
Awesome.
appreciate your time. Great to get to meet you. And I'm sure we'll be connecting again really soon.
All right. Thanks, everybody. Thanks for having me,
Thank
Tanisha.
you.
Everyone have a great day.
Thank you.